there's something happening again in less than 24 hours that I think is already affecting crypto prices. And no, I am not talking about these token unlocks, which I personally think always have an effect on tokens as well. But the reason I'm not covering massive unlocks, and if you don't know what these unlocks are, they're basically periods of time where more of the token that is not in circulation is coming into circulation, partially because of early investors or rewards, and very often they do lower their prices slightly before these unlocks, so these early investors have lower prices to sell at, and so they've got some money to buy back up the dips. Let's just call that speculation though, as we don't know if it officially happens, but for some of the smaller projects, it does make a lot of sense. Bigger projects also actually, but anyway, that's besides the point. I mean, the unlocks are big, but Bitcoin right now being below 61,000, I don't think can be attributed to some small $400 million unlock situation like this. No. Something way more important is happening. And for the uninitiated, I also don't think it has anything to do with the ETFs. Yes, the situation with the ETFs was very interesting, but just not really being record-breaking and being slightly below the crazy hype, I don't think should cause crazy price dumps. To be clear, this is what James said. By any reasonable relative measure for the launch of these ETFs, they were a massive success for the Hong Kong market. It's just that some were trying to look at what happened in the US and equate that in some way to the Hong Kong ETF market on an almost absolute basis, meaning you look at the US numbers and compare them directly to Hong Kong numbers, even though the Hong Kong market is like 1/20th or whatever there. Because again, if you put them in relative terms, they actually did do pretty well, at least as far as we know. Again, $12.8 million in volume looks really stupid in my opinion. But when you look at the assets, $141 million, and it equates to 22 billion in US numbers, it's actually not that bad. Anyway, let's talk about what's important and happening in just a few hours. I should have probably logged in for this, but because, take a look, inflation-wary US rate options, market cautiously prices for, that was read so bad, for 2024 Fed hike. And if you're wondering what exactly am I referring to here, what are we talking about? Honestly, everywhere on the internet, this is the hot topic. Everybody's like always, right? Everybody's talking about US inflation, US interest rate data, and we've got tomorrow the federal interest rate decision coming out. 10 p.m. Dubai time. We could definitely actually go ahead and live stream this. But the funniest or most interesting part is that the expected result is that the numbers stay the same. So we go from 5.5 and we actually stay at 5.5%. Anything different than that number though usually catch the markets off guard ever so slightly and lets things move. Right now, in the anticipation of tomorrow's event, I think we're seeing crypto prices move in quite a negative fashion, with right now as it stands at least, can I switch it up? There we go. Right now as it stands, Bitcoin going below $61,000 even, Ethereum having a almost 5% fall, Solana having a 5% fall, XRP 2.16% down, so not actually too bad, but many altcoins having a pretty bleeding moment. And that's the funny part. First of all, that over the last month, when looking at that, we've actually seen some pretty big downers, because when taking a look, I'm not so sure what my sentence was ending at there anymore. I got distracted by something. But what I was trying to say is that this is the first month in a very long while that we are actually seeing some negative numbers. And if we're taking a look, right, September, October, November, December, January, February, and March, we're all more positive. But when taking a look back at it, right, because sometimes you like to look back, August, July, May, everywhere in 2023 and everywhere in 2024, we have never seen, at least in these 2 years, not seen a time worse than what we're seeing right now. And depending on whether or not Bitcoin decides to go ever so slightly down more here, this could be the worst month in nearly 2 years. Right now, the worst month thus far has been November of 2022. But if we go less than I should say down more than 16.23%. This will be the worst month since June of 2022, which again is almost 2 years ago. And I'd say it's kind of a positive thing. If you take a certain look at it, you might propose and say that this is similar to what we saw back in 2020, where again we had crazy gains for a good while and then went down multiple months in a row. But when we look at the past, it seems, right? I'm just playing devil's advocate here for a little bit. It seems as if the second half of 2021, with our peak being in November of 2021, was actually the better times. But when taking a look at these numbers, it doesn't really seem as if this, let's call it June to November, was really the most amazing period. It looks as if the January area was more amazing, so the first half, but that's just a matter of perspective, because usually it's when Bitcoin kind of starts cooling off that the altcoins go for a crazy rally, which is a little bit later into the cycle. And I think that right now Bitcoin is finding its grip, but since it's trading in a range and hasn't really gone for a massive move in a longer time, altcoins have also not really found themselves a way to go. And my conclusion out of all that is, yes, it does look pretty similar to 2021, with right now it being ever so slightly negative, but it actually not being at peak levels just quite yet, but that coming a little bit later in the year. Once more, ladies and gentlemen, the price action we've seen right now is crazier than ever before. We have never hit a new all-time high before the halving, and so if we take a couple months, a little bit of time to really pick up the pace again, it would just be normal instead of exceptionally quick. But with all the ETF announcements coming out, in my own humble opinion, the adoption is going so fast that I think we're going to blow a lot of expectations out the way. Anyway, to get back to our earlier story, options on secured overnight financing rate futures are showing a higher probability that the Federal Reserve could hike interest rate a 1/4 percentage point this year, and that next, as US inflation and the labor market remain resilient. So basically, throughout the next little while, things are ramping up. And the point basically being that because of the higher than expected inflation, at least thus far, that there's going to be no cuts for a longer while. And obviously with higher interest rates, I've described this to you guys before, a lot of things are more expensive because the cost of capital is higher. Simply put, if you wanted to invest into a property, you'd look at what is it going to cost me, not in cash, because that's not how most people do it, but in terms of getting this capital. If the interest rate is extremely high, generally speaking, people are less likely to consume and purchase things, but also people are less likely to invest in new adventures, let's call it, or new ventures actually, because the cost of capital, so the cost to borrow, is higher. You're less likely to buy a home, all that 𝗕𝗔𝗪𝗓, and you're more likely to save. That's again the core principle of things. But whereas usually it's kind of predictable in economic theory, it's right now kind of anybody's guess, and nobody seems to know exactly what's going on anymore. But obviously we've got ourselves a meeting tomorrow, or at least the meeting is already happening, but we get ourselves some more information tomorrow. And of course there's also a talk at the end, which could be nice to gauge expectations. JP Morgan and Goldman Sachs expected the first rate cut in July, whilst Wells Fargo thinks it's going to be September, and Bank of America doesn't expect it until December. But they also state that there's a high degree of uncertainty. That uncertainty seems to have worsened recently after inflation rates tumbled throughout 2023. Progress stalled in the first quarter of the year, which forced giddy investors who once priced in several rate cuts starting in the spring to recalibrate the forecasts. And that reflects the proverbial bumpiness of inflation's journey back down to the central bank's 2% target, a point that Fed Chair Powell often makes. And again, the interesting GDP numbers from last week don't really help with anything at all. It actually raised fears of stagflation, which is basically where you've got really high inflation, but GDP is not really growing. Matter of fact, the growth deteriorates, so your GDP does bad even though inflation goes up, whereas usually as prices go up, production increases. You'd expect to also see some growth, which is why high inflation in a lot of ways kind of looks good, but is bad because everything's getting more expensive. But usually it's because people are producing more, people are more excited, people are buying more. So it's bad for people, but it's because of things doing good. But if things are getting worse because everything's getting more expensive, but it's not growing, that's bad. And once more, to put it into theory, if inflation is high and you cut rates, the whole concept there being that things would do even better to cause even more inflation because people are spending more, investing more. And so the core thesis at the end here, or I should say their thesis is, we believe that if the inflation continues to remain persistent throughout May, it is unlikely we'll see any rate cuts until July or September, Kathleen Grace, managing member and chief executive officer of the Fiduciary Family Office, said in a note on Monday. And again, The tumbling is basically starting tomorrow, as we've got ourselves the interest rate numbers coming out, which most likely will stay the same, but if they do not, expect some great volatility. And I'll add that it's really interesting when you take a look at the fear in general markets being extremely high as of this point. And I guess as investors right now are unsure of where the general economy is going, the fear indeed is not only in the crypto market, but in every market, which is funny. The fact that people in crypto think, oh, it's us that are the fear is everywhere. The fear is literally everywhere right now. People are not sure what's going to happen next. People are not sure what's going on. And crazy times are good times for traders, but that's about it.